Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about the total cryptocurrency market capitalization and discuss what is the worst case scenario, or at least what I would consider to be the worst case scenario. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. We, of course, do have different tiers available, including a free one. So make sure you check that out. Link is in the description below. We send out a weekly newsletter for the free tier. Now, what I want to do is I want to go through systematically the discussions that we've previously had, provide an update as to where we are right now, and talk about the potential implications for the future. Now, I am going to go through this systematically. It is going to be repetitive if you've watched the prior videos. So there's a good chance you already know what I'm going to say. Be that as it may, I'm still going to go through the motions anyways, okay? So just a fair warning. Now, a couple of caveats. One caveat is that it's called the worst case scenario, okay? First of all, just because I think of something as the worst case scenario doesn't mean that it is. I could be wrong about the worst case scenario. Second of all, I do also understand that theoretically the worst case scenario is that everything goes to zero. Now, I know a lot of people might just assume that I'm always bearish on crypto if you've watched the channel over the last year, but you might be surprised to know I'm actually very long-term bullish on crypto, and I think you'll see that side of me come back out probably within the next half year or so. Okay, so fair warning. If you are bearish and you've been following me for a while, because I lean in the same direction as you have, I will be more than likely pivoting my stance within the next 6 months or so. And I just want to mention that and just sort of be upfront about it. So one of the things that I think we need to talk about here is we first need to get grounded as to how we got here in the first place and why we're making the comparison in the first place. The dot-com crash that occurred more than 20 years ago has thus far served as a fairly accurate analog as to what cryptocurrency is going through. I think you could make the case that this is our dot-com crash. Now, that might be scary to a lot of people, but when I look at the dot-com crash, I just think of how lucky people would have been had they stuck around for the entirety of the bear market and then continued to watch the next bull market take shape. Generational opportunities were found in that, okay? These opportunities don't come around very often. And in the same way that people might have doubted the future of tech stocks way back then, I think they're going to doubt crypto today. But when we look back on this phase in 10 to 20 years, I think it will have been very obvious that we are just going into a generational opportunity for the cryptocurrency asset class. All right, now I want to be clear that that is where I stand. I do think there's reason to believe that prices could easily go lower, and we're going to talk about that in this video, okay? So this all started, more than a year ago when we kind of acknowledged, hey, there's actually a lot of eerie similarities between the crypto crash that we're experiencing and the dot-com crash that occurred again more than 20 years ago. One of the similarities is the fact that they essentially both peaked at approximately 3 trillion. Another similarity is that you had the dot-com stocks overtake the Super Bowl in the same way that crypto stocks, or not stocks, but cryptocurrencies and crypto companies in general overtook the Super Bowl. It sort of makes me think like, hey, if I ever see an ad in the Super Bowl for this, groundbreaking new technology, it's probably going through a bear market, right? Because to get the type of money that you need for these companies to really get into the Super Bowl, you sort of have to go through a bull market, and a fairly massive bull market at that. And so by the time they have that money to really go throw into Super Bowl ads, likely something is amiss, okay? So you have to consider that. Now, again, we peaked at around 3 trillion back then in the dot-com crash, but we also know that crypto peaked at around 3 trillion in this cycle, right? You can see the total market cap of crypto peaked at around 3 trillion. Now, we followed this series up, and by the way, I'm going to link all these videos in the description below if you want to go back in time and look at some of the other videos and kind of follow along as to how we got here. So this is one of the first videos, And you know, we went systematically through the comparisons between, you know, what the Nasdaq did, and how far it had to drop and over at what time frame that had to occur, and sort of made the comparisons to crypto. And I mean, you can see that Bitcoin was right around 42K or so, just below 42K. Now, we followed this video up about, I mean, again, this one was over a year ago. We followed this video up about 9 months ago with another video where we continue to look at the similarities between these, you know, between these two you know, cycles, one with tech stocks, of course, 20 years ago, and then of course this one with crypto. And we also noted that inflation, and that this high inflation was likely going to, you know, make the Fed extremely hawkish, right? Extremely hawkish. And back then we talked about the dollar likely rallying on up to around the 115 level. I mean, you can see at the time it was only around 104, right? I mean, when we talked about this actual move, right? The dollar, the US dollar currency index was around 104.7, and we sort of speculated that we were going to see it climb all the way to around, you know, just below 116. Now again, if you go take a look at the US dollar currency index, this is more or less what happened, right? I mean, you see back in that video about 9 months ago, it was right around these levels, 104, and we went up to right around that 114, 115 level. So again, like, there are reasons to continue to follow this. It's played out well so far, and it could continue to play out. It could also deviate at any point. And remember, it's not about being right or wrong, right? Like, it's never about being right or wrong. It's just about managing your risk and realizing what are potential outcomes, and trying to weigh various outcomes in your mind, and then figuring out which ones do you think make the most sense, and then sort of hedging yourself for, you know, the two most likely scenarios that you could see, or something like that, right? So we follow the video series up talking about that. And then, you know, half a year ago, we did something similar, and we really noted the three primary rallies that the tech stocks had back in the dot-com crash. We had a 40% rally, a 50% rally, and a 60% rally. And unfortunately, none of them marked the bottom, right? None of them did. And we talked about how it looks like this 60% rally could be aligning with a typical crypto bottom that occurs at the end of a year-long bear market, you know, occurring sometime like November, December, January, February timeframe, right? So we talked about how difficult that might be. And then, of course, we followed this up 3 months ago, again, continuing to talk about this potential 60% rally. And then, you know, we did it again a month ago as we were climbing this 60% rally up to the 50-week SMA. And the reason why we did that was because the Nasdaq was also rejected off of the 50-week SMA. And then we most recently talked about this when Bitcoin was right at 25K. You know, I actually made this video, and I was somewhat nervous to put it out because I don't like coming out and being the bad guy and saying, you know, hey, like, what if we have to go back down? But there's something that has happened since this video that I think it's worthwhile to follow up on. And I just want to play a very brief clip. Now, this is not to say that everything I've said in these videos has been 100% accurate. I know that it hasn't, and I know the exact path has you know, not been exactly what we necessarily envisioned it would be, and it never will be. And even the path that we might put forth in this video, it's likely not going to go on that path. But one of the things we talked about was also this weekly RSI. Maybe we'll get to it here in a little bit, but I just want you to remember we talked about the weekly RSI. And I'll go ahead and show it, I guess. We talked about this weekly RSI and how, and I'll just play the clip. So a lower low on price, a higher low on the weekly RSI, followed by a 60% move to the upside, which rallied to the 50-week moving average in the same way the Nasdaq did. Now, the weekly RSI ended up putting in a double top. The first top did not reach the 50-week SMA. The second top went just above it. But in both scenarios, the weekly RSI was essentially the same. Bitcoin, you can see that right now, the weekly RSI has broken a little bit higher. But of course, the week just started, right? We don't know yet how this week's going to end. So that's the point, right? We talked about how, look, we broke above this potential double top, but the week just started. We don't know how it's going to end. And so before we get too far into this video, I want to draw your attention to the fact that if you look at the weekly RSI, it ended up being a double top, right? What happened, right? It was the week wasn't over, and what happened by the end of the week? We came back down. And look at this. Look at this comparison here, right? It ended up being a double top on the weekly RSI in the same way the NASDAQ weekly RSI was, in fact, a double top more than 20 years ago. And, I don't imagine this is going to play out exactly forever. It does sometimes seem almost too perfect, so it's like something's got to give at some point. And you could even argue it's actually deviating a little bit right now. I'll explain more about that later because you might say, well, doesn't it seem like it's the exact same thing? There might actually be a small deviation. We'll talk a little bit more about that later in the video. But again, there are a lot of comparisons, and really the comparison really starts with this same thing, right? Like this 77% drawdown in the NASDAQ, okay, followed by a 60% rally to the 50-week. And remember, with Bitcoin, one of the things we said, right, in that video that I just played the clip of, is that the first move does not make it to the 50-week, but the second one goes above it on wicks, right? And that's what happened, right? No weekly closes above it. We had wicks above it, just like the NASDAQ did, a long time ago. So that's where we currently are. So we're going to get rid of the weekly RSI. We might revisit it in a little bit, but just keep it in the back of your mind. So the NASDAQ had the 77% correction, followed by a 60% rally to the 50-week. Okay, now we've seen Bitcoin do the same thing. It's the exact same move so far anyways, right? You see that 77% rally to the downside, followed by that 60% rally to the 50-week with the double top on the weekly RSI and the rejection off of the 50-week moving average, right? Furthermore, we also saw the NASDAQ put in a series of rallies that were quite impressive. The first one being about a 40% rally. Go over to the total market cap. You guys remember the rally from January to March of 2022? Guess what? It was about a 40% rally. We know that the NASDAQ's second primary rally was a 50% move. And guess what? With total, do you guys remember the rally that we had back in the summer of 2022? Guess what? It was a 50% rally. Now, there are some small deviations here, and I think we owe it to ourselves to be fully transparent about where these things could be deviating. For total, this most recent rally was about a 49% rally. So it wasn't really a 60% rally like we had with the .com stocks on that third rally. The counterpoint is that Bitcoin's rally was 60%, whereas its prior rallies were not exactly the same. So if you look at Bitcoin's first rally, it was about a 40% rally, but the second one was only about a 40% rally. So it's not the exact same thing, but you get an idea, right? There are a lot of similarities between the tech stock collapse back in the .com era and the crypto collapse that we're seeing today. Right, a lot of similarities between them, and I think we owe it to ourselves to continue to look at these similarities in case they continue to play out. So we know the NASDAQ 40% rally, 50% rally, 60% rally. The 60% rally, by the way, took you to the 50-week SMA, and then what happened? The final low was actually about 30% below this one, the 60% rally. So for total, where would that put it? Where would it put it if we went 30% lower below the prior low? It would put the total market cap at around 500 billion, which represents a sizable correction from the current levels. I mean, that's 30% below the prior low. From the current levels, that would represent another 40 to 50% correction. And again, we know that these percentages are subject to slight changes, like it's not going to be exact. So, maybe it could be 40% down from here if it's going to follow it, or maybe it could be 50% down, and get you closer to 400 billion. I've been fairly consistent, I believe, in all of these videos on the worst case scenario, saying that I think the worst case scenario for crypto would be somewhere around a 400 to 500 billion market cap for the entire asset class. Another reason that you might think about it in terms of that is if you take a look at the .com crash from this peak here, it actually crashed over about 2.5 years, where the entire asset class went down about 83%. Now, if you were to take a look at total, where would 83% down from the peak put you? It would put you right around 4 to 500 billion. Okay, which again is still representative of a 40-50% correction from the current valuations. Now, if you take a look at the Wall Street cheat sheet, you can see just how similar these bubbles are, right? The idea of the psychology of a market cycle. And if you take a close look at this, right, you can see you have this capitulation, you get the first bounce. The second bounce is not quite as high as the first bounce, and it also puts in a new low, right? It's essentially the same thing. And what happens after that, right? You see it slowly bleed for about, about 6 months, about half a year, a slow bleed. And we actually talked about this in the prior videos, is that what happens, and I again, this is just my interpretation of it. I could be wrong, okay? And I mean, it's fine if I am. But my interpretation of it is everyone wants to front run everything now because everyone's so aware of this cyclical behavior that they don't really let it just capitulate in the same way that it has in prior cycles. If you think back to 2018 and 2014 and other cycles, like at the end of the bear market, you had like a 40-50% crash. But this time, we didn't really get that, right? Like it's just like a pathetic 20% crash. So it constantly leaves, I think, people thinking like, well, is that it? Or, is there more? And we didn't really get a blow off top like we have seen in the past. But at the same time, you might not see a capitulation bottom. What if it's just a slow bleed? It's a possibility, right? Like it's a possibility. What if it's just a slow bleed where people become apathetic? And I think this is something we need to continue to sort of reiterate. Now, one thing that I think we should take a look at as well with the NASDAQ and with this relative strength index, this could help identify where the bottom is if it continues to play out, okay? So if we take a look here, let's look very closely at what actually happened. Because you had a weekly, the weekly RSI for the NASDAQ kind of break out from these levels, okay, put in that double top. Now remember, this double top might be akin to, to Bitcoin's recent double top at the 50-week SMA and with the relative strength index. Okay, so let's just go take a look really quick. So again, breaking out of this, followed by a double top on the weekly RSI. Again, you sort of flip back and forth, right? Breaking out, double top on the weekly RSI. Now, where did the NASDAQ bottom? Right? Where did it bottom? It bottomed close to a double bottom on the weekly RSI, right? So if you were to draw a line across, you almost got a double bottom. But here's the thing. That was not the bottom, okay? What was the bottom was the higher low on the weekly RSI. So just kind of like how it was over here. You first had a low, and then you had a lower low on price, but a higher low on weekly RSI, right? This is a sign of some type of divergence where the bulls would point to and say, hey, this is actually quite bullish. Yeah, the price went lower, but the strength is fading for the bears, okay? And so you get a breakout. So I think what to look for is, does the weekly RSI come back down to the same level that it was before? And if it does, it might not actually mark the bottom. It could just be one little pathetic last little bounce followed by a slightly higher low on the weekly RSI with a lower low on price. Okay, so that's what you saw. That's what we saw play out back in the .com crash. Now, if Bitcoin follows this, then what are we looking for here on the weekly RSI? Because the weekly RSI right now is all the way up at 45. It would need to go all the way back down to around 25 or so. So if you see the weekly RSI come back down to 25, go back up a little bit, and then come back down and put in a higher low where a lower low occurs in price, that could be it, right? I mean, that could be all she wrote for the bear market if in fact it's not over, which again, this worst case scenario video is certainly exploring. So this is a consideration to make, right? Certainly a consideration worthwhile and for us to continue following. And normally I only provide updates to this video series every few months or so. I know recently we've been doing it more so every 2 weeks. And the reason is because it feels like we're getting into crunch time. And it feels like this is important. Like, it didn't seem like an important deal back a year ago to do it every single week, because, you know, these bear market rallies, they just take months to play out, and you have to see the 40% rally manifest itself, then you have to see the 50% rally, and then you have to see the 60% rally. And now we've seen all three of those, right? We've seen the 40% move, we saw the 50% move, and we saw the 60% move. We saw the double top on the weekly RSI, and now we're seeing things come back down to earth. So where does that lead us to next, right? Where does that lead us to now? Well, I would like to draw your attention to a few other comparisons before we dig a bit further into the weeds, okay? So, this one's dubious at best, okay? And I'm not asking you to take it to the bank, certainly, but suppose that you did take it, suppose that you did at least take it to heart a little bit. This peak here for the NASDAQ back over here in 2000, guess where it occurred, all right? It occurred at 48.16, all right? Now, is it a coincidence? Yes, it is a coincidence. I'm under no illusion that this had to have played out in the exact same way, but it actually makes the numbers quite easy to compare. What else in crypto peaked at around 4,800, right? Ethereum, okay, Ethereum. And what we're going to do is we're going to go take a closer look at that, okay? So we're going to go take a look at ETH and see, where did Ethereum exactly peak at? 48.67, okay? So let's put that on the chart. So we'll say 48.67. Now, where did the NASDAQ get rejected by the 50-week SMA? Right? Where did that happen? In the dot-com crash, 1,700. Let's get the exact number. We don't need to hand wave, right? I mean, might as well just get the exact number. 1,710. I'm not going to do the cents, but you get it. I mean, 1,710. What else just had a rally to the 50-week SMA? By the way, if you look at this rally right here, it was a 60% rally. Now, we did put in a lower low over here. We'll talk about that a little later. But where did this rally take us to? It took us to the 50-week. Where did it peak at? 1745. Okay? So this is for Ethereum. You have 1745 on the chart. So 48.67, 1745. Look at the NASDAQ. 48.16, 1710. Look, guys, I'm not saying it has to play out the exact same way, but so far history has been rhyming pretty good. Okay? It's been rhyming pretty good. The rally that started this move to the 60 or to the 50-week SMA started at 1088. Started at 1088. The rally for Ethereum started here at 1073. Again, I'm not going, we will talk about this capitulation here in a little bit. So again, there are a lot of similarities. The question is well, where did the NASDAQ bottom? Right? Well, it bottomed at 795. So it bottomed at 795. Whereas Ethereum, now it's at 1426. So that would represent a sizable pullback from here. To go down to 795 would put you 44% down from the current price. Now, here's where it gets a little more interesting. You guys know the logarithmic regression band that we talk about for Ethereum. I reference as like, okay, when's Ethereum going to come home? Remember, the NASDAQ bottomed at 795. The Ethereum logarithmic regression band fit to quote unquote non-bubble data. The fair value of it right now is at 791. Okay? So, this band where I think a lot of people just assume we're never going to go back into it because of all the changes that Ethereum's had, proof of stake and deflationary aspects of it. They don't think it'll happen. I contend that it easily could happen. Okay? It's so eerily similar that the fair value of the ETH fit to non-bubble data, which is somewhat arbitrary based on my own input, so we'll have to take that into consideration. But we've had this on the channel for years. It's just so funny how after all these years, we developed this back in 2019. After all these years, the fair value fit to non-bubble data is 791. The NASDAQ has been giving us a blueprint of this crypto crash for a long time, and it bottomed at 795. But remember, this is a monotonically increasing function, right? It's just going to trend higher. So again, it's 791 today, but in a little bit, it'll be at 795, right? So there are a lot of similarities here. Still a lot of similarities that I think we need to keep in mind. Now, I've also made some comments before that the deep value zone on ETH is 400 to 600. So then, how do I reconcile that, right? How do I reconcile that? It can be hard to sometimes, I think, well, to me, the deep value, the real deep value would be 400 to 600. Is it going to play out? I don't know, right? I mean, it could. I hope it. I certainly hope it does. But does that mean it's not worthwhile to get interested before then? Probably not. What if it plays out like the NASDAQ where it goes sub 800 and then that's it? The counterpoint is that when Ethereum really got moving to the downside back over here, it was bad, and it was quite a plunge from the peak. Okay, so from the peak, from this initial peak to this first low, before we ended up getting that rally to the 50-week, it was an 82% drop. But whereas the NASDAQ, it was only a 77% drop. Yes, it was a lower low. Ethereum put in a higher low. But one of the reasons you could argue it was a higher low was because the first drop was so catastrophic, right? It was an 82% move to the downside. The NASDAQ's first drop was only a 71% move to the downside. So yes, if you're an ETH bull, you're going to look at this and say, well, this was a higher low. But the only reason you could argue it was a higher low was because the first drop was so much more catastrophic than the first drop that the NASDAQ had. So something like that could play out again, right? Where it's always possible that Ethereum overshoots the fair value, just like it overshot the first drawdown that the NASDAQ had before it had its rally to the 50-week SMA, or not the first one. You can see that in the past, we've overshot the fair value. Here, we went below the fair value. We went below the fair value right here as well. And we went below it over here. So if that happens, the lower bound on this trend line is 547. So that would get you into that $400 to $600 range. And we've actually gone below this before. So I would say that is still a possibility. But I would also keep that sub 800 level in mind just in case that ends up coming into play here over the next several months. Okay. Now, here's another comparison. Okay. I told you we're going to go systematically through this. So if you have somewhere to be, pause the video and come back. But we're going to go through this very systematically. Take a look at the length of this bear market from the .com crash. Okay. It was 133 weeks. That's a long bear market, really long bear market. 133 weeks. It's 2.5 years, in fact. Now, how long has the bear market for crypto been? Well, you could think about this a couple ways. You could measure it from the peak, which is probably where we should measure it from, but most indicators, like 99% of indicators that I have and that I've created and that also other people have created, consistently suggest that April was the top. And somehow we just sort of leveraged ourselves up to a new high, right? But the mania phase was back in April. Okay, that was when the real mania phase was. What's interesting with the NASDAQ is that it also peaked at around that same time. So if we actually find the week of the high, it was close to the end of March. The Bitcoin peaked in April, a couple weeks later. So what's interesting is if you take this time move here and you go out 133 weeks, it puts it in October of 2023. Go back and look at this chart. Follow this along. Where does the bottom come in? October, right, of 2023, right? Like this is a sort of looking at the .com crash. Like this was October of 2023. So it would have been, as measured from the first peak, the one that arguably was more important, it would have been a 2.5-year bear market if you measure it from then. If you measure it from April and you assume that November was the bottom, it was still over a year and a half. If you just take November 2021 as the peak, then we basically had a pretty typical year-long bear market, right? And because of that, there's reasons to be hedged. There's certainly reasons to be hedged, not financial advice, but there's always a chance that the bottom is in, and that it doesn't have to play out in the worst case scenario. We have to be aware of that, right? We have to be. I'm not going to sit up here and say that anything has to happen. That's a good way to sort of get in trouble. If you think something has to happen, then you're not adequately hedged in case it doesn't. So we need to consider, like, well, what if the bottom is in? One thing to remind yourself of is, even if the bottom is in for Bitcoin, there's a good chance it's not in for a lot of altcoins. Now, a lot of people have pointed out that Bitcoin has shown a little bit of weakness recently compared to some other projects, but I will remind you that a lot of these altcoins on their Bitcoin pairs remain in macro downtrends. Here's ADA Bitcoin. There's nothing about this chart that has been screaming it's been showing strength. Here's DOT Bitcoin, right? There's not strength to be seen here. Yes, Ethereum has been holding up okay, and people would point to that. But again, it still did technically go down last year, and so far this year, it still has technically gone down as well. So yes, we could say that Ethereum's holding up, but in the same way, you could also point to the idea that it's sort of playing out in a very similar manner as to this over here, where you have 3 red candles, 2 green to get everyone excited, followed by the plunge. 3 red candles, 2 green to get everyone excited, followed by the plunge. This plunge here occurred in May, okay? Bitcoin rallied until, the end of March, early April. So you had 1 month where the Ethereum Bitcoin valuation held on. You could argue that back over here, that month was April. Now that month is potentially March, right? And then you kick the can down the road 1 more month, and the same thing could easily play out, okay? That's something to keep in mind. The other thing that we've talked about before that has kept me on the bearish side, especially for the altcoin market, is the relatively low Bitcoin dominance. Probably one of my most polarizing opinions, but it is what it is. I'm not going to shy away from it. I do think there's a lot of garbage in the space that needs to get cleaned up. If you take a look at the dominance, including stablecoins, yes, it has had a pretty significant pullback recently. I also see higher lows. This also includes stablecoins. If you go and exclude stablecoins from the equation, you'll notice that it's actually been slowly trending higher for quite a long period of time, right? Like just putting in higher low after higher low after higher low. And I think that is an important consideration to make. If you include stables, yeah, like it deviates. If you go look at the comparison between Bitcoin dominance with and without stables, this is what it looks like. So yes, the stablecoin market has grown significantly, since May of 2021, but excluding stables, Bitcoin has been outperforming the vast majority of the altcoin market, even though there are a few altcoins that have outperformed, but there always are. And I don't mean to hide from that. Like there always are some altcoins that outperform. One other thing to consider with regards to could Bitcoin go lower is take a look at Bitcoin, and I want us to overlay interest rates. So we're going to overlay US interest rates. Take a look at this. When did Bitcoin bottom last cycle? When we hit the terminal rate. Bitcoin bottomed in 2018 when we hit the terminal rate. After we hit the terminal rate, Bitcoin went sideways until the Fed started to cut. Now, Bitcoin didn't go down because the Fed started to cut. Bitcoin went down because there was a problem with the economy. And because of that, the Fed started to cut. The Fed recently has been continuing to raise interest rates, right? They've been continuing to raise interest rates. And we know that the expectations have been constantly shifting, right? I mean, the sort of the expectation on where is it ultimately going to go has been shifting fairly consistently. And if I pull it up here, one of the things that's interesting is you can see there's actually been a subtle shift here from 25 basis points being the most likely outcome to now 50 basis points being the most likely outcome. Now with the most recent drop in asset prices, this has actually come back down a little bit. You can see that yesterday it was actually closer to 80% likelihood of a 50 basis point rate hike. Now it's come back down to about 60%. The market is really unsure. One of the reasons is because inflation, the fairly optimistic readings on inflation that we got back in November and December, a lot of those were revised back up to the upside, like Powell mentioned. And then additionally, we've just had a lot of hot inflation readings since then, and so the market has been potentially underpricing the terminal rate. But if you go look at probabilities going pretty far out, you can see that the terminal rate is now being priced to be about 5 3/4, and for the Fed to start cutting in November. Okay, so what happens if the Fed reaches the terminal rate in June? Maybe Bitcoin rallies, right? Maybe Bitcoin rallies after they reach the terminal rate, just like Bitcoin rallied after they reached the terminal rate in 2018. But then at some point, the Fed had to start cutting because they did so much damage to the economy. That's what sends us into a recession normally, right? Is they do too much damage to the economy. And the Fed started to cut. So you could argue that whenever we reach the terminal rate, Bitcoin could rally from that point until the economy falls apart and the Fed has to cut, right? If the terminal rate is reached by June, and if the Fed has to start cutting late this year, that could also correspond to that September, October, November timeframe where you see a potential lower low on the price, but maybe a higher low on the weekly RSI. And then perhaps that would mark, be the end of it, Again, I say this, we look at this and you get scared. Some people get scared. You could also look at this and say, wow, think about the opportunity these guys had. To see that 83% move to the downside, followed by a 2,000% move to the upside in the next cycle. Sounds pretty nice to me, I don't know. I mean, it's just something to consider, right? Furthermore, maybe I'll throw in a little bit of just one bullish thing just to get you thinking. You guys remember the comparison we made with the prices? I wonder if I can just pull it back up if I undo this enough. There it is. This was the NASDAQ. Where did this rally start? All the way back here at around $100, right? I don't know, 108, something like that. I'm not going to go find it exactly, but it's around 108. And then where did Ethereum start its rally? That took us to 4,800. Okay, where did it start? If you say it started here in March, it's about 90. Okay, so it was, even from the lows, it was basically the same move. 90, so 100 to 4,800. 100 to 4,800. For the NASDAQ, it took place over 15 years. For Ethereum, it took place over 1 year. For the NASDAQ, we then had this. This peak here was at 2,000, but this peak was at 16,000. This is ultimately the vision I would actually have for Ethereum. I mean, I'm not saying that it has to go that high next cycle, but I do think it will eventually come out of this mess and trend back much higher. So I just want you to be aware that, while we do talk about these potential negative outcomes and these bearish outcomes, we don't do so from a perspective of saying like, oh, well, crypto just has to go down forever. It's just trying to have realistic expectations as to what the market might actually bring us, okay? Now, a couple of indicators I want to take a look at. If you go take a look at some of the bottoming indicators, there's plenty of them that, you could make the case for that the bottom's already in, right? Plenty of them. You could look at the 1-year ROI and say, hey, like it looks pretty cyclical to me. The counterpoint is if Bitcoin did capitulate here in the next few weeks, you could see it go back down to those same levels. So that's something to consider. But one thing that I remind myself of is that normally the market bottoms on apathy. Take a look at the social risk. It bottomed on apathy last cycle. This time, when the market bottoms, everyone starts to tune back in because they just can't get enough of watching the train wreck. That's why I think we have to consider, like, what if the market needs to still get more apathetic like it did back over here? So you can imagine you take a moving average of this, 30-day moving average, right? It's still trending down, just like it was trending down over here. Overlay this with the price of ETH and color code it. And what do you get? You get something that looks like this. What happened when it went dark blue? When the social risk went to the lowest risk band, what happened? That's when Ethereum capitulated. It's heading that way now, it looks like to me. So that's, I think, something we have to be aware of as well. Furthermore, you could look at the total indicator risk that includes the social on-chain and price risk and see kind of where we are within the context of history, right? A low, a high, a lower low, a lower high, kind of very similar to what we saw here on the NASDAQ. Or on the textbook bubble thing that we were looking at. So the other indicators that I want to draw your attention to, one of them is the 30-day SMA of the supply and profit and loss. Normally the market cycle bottom comes after they cross, right? So cross, bottom. Cross, and the bottom. Or sorry, fake cross, real cross, right? It's only cross for like a day or two. The real cross, bottom. Cross here, and then bottom. This time, I think this is sort of the fake cross, like we had back in 2015. Why? Because after this very brief cross, the market did not go lower. But now you can see they're starting to curl back up. So it's almost like, the market couldn't help themselves, right? Like investors couldn't help themselves. They had to front run it. But what if we eventually have to go there anyways? And the people that front ran it just got a bit ahead of themselves. And perhaps we still have to go to that level. Maybe we could also take a look at the balance price, which is something that I think is worthwhile to take a look at. If you look at the balance price, one of the things you'll note is that normally we get the market cycle bottom on a daily close below the balance price. You can see this is what happened in 2011. You can see that in 2015, that the market cycle bottom occurred on daily closes below the balance price. If you look in 2018, the market cycle bottom occurred on daily closes below the balance price. And then if you look in 2022, we didn't go below it. Not on a daily close. We did wick below it because you can see it was at 15.7, and we know we went to 15.4 or 15.5 and then 15.4. But on a daily close, we were not below it. And now the balance price is sitting at 14.4K. So, this could be just to say, hey, well, maybe we just actually have to come back and complete it, like instead of leaving these things just like slightly out of, slightly higher than where they should have been, perhaps we eventually come back down and do ultimately put those sort of those major lows in. And it's just a possibility. Again, there's no guarantees here. The other thing that I think we talked about a little bit, going back to sort of Bitcoin and some of these indicators, one of them is the weekly death cross. So if you look at the death cross, I mean, you can see a lot of people discount it, right? Because you always get a rally, right? We've said this every single time. Every time you have a golden cross, or not every time, but most of the time you get a golden cross, what happens on the daily time frame? You get a dump followed by a continuation of the trend. That's what happened, right? You had a golden cross here, you had a dump followed by a continuation of the trend to the upside. But the same thing you could say on the weekly. Everyone always a lot of people give these indicators sort of bad reps, but a lot of times they actually are kind of informative. I mean, you have a weekly death cross and you pump. That's why everyone makes fun of it, right? Because you hear death cross and then it pumps, so you make fun of it. You hear golden cross and it dumps, so you make fun of it. But normally, in the short term, it does the opposite of what the cross would indicate, followed by a continuation of the trend that caused the cross in the first place. Okay, so you saw that on the daily time frame. On the weekly time frame, you had a death cross, followed by a pump, just to get everyone to sort of point and laugh at the death cross and anyone who talked about it, followed by a continuation of the trend that caused the death cross in the first place. Look at the S&P 500 and look at the context of history. Whenever we had a death cross on the S&P, while your forward 12-month return was fairly okay, it didn't mean that you couldn't go down another 30% from that level, right? Go down another 20, 30% from the level. And you go back and look at the 70s when we had a period of high inflation, right? Death cross went down another 20%. Death cross, we went down another 34%. Right? So just because you get the opposite of what the death cross would suggest or the golden cross would suggest, doesn't mean that it can ultimately play out in the same, eventually play out, even if you get a short-term move, just to sort of get people sort of off sides on what their expectations of it would ultimately bring. This is something we haven't really seen before. And furthermore, you could argue that sorry, let me get the right thing on here. Sorry, I want the 400 week. Sorry, that is the I want the 300 week here. So let me find the let me switch this one to 300. So one thing that we've talked about before as well is that the first cycle sort of held support on the 100 week. The second cycle held on the 200. The third held on the 300. Maybe we have to go to the 400. Okay? Possibility, right? And the 400 is below the prior low. Okay? it sits below 15K. So that's something I think you have to consider as well. Now, at some point soon, I'm going to put out a video and we're going to go through the bull case and the bear case. Okay? Because obviously this one's the bear case. But we have a video series called The Bulls versus the Bears. We did one a few months ago, in fact. And in that video series, we said, hey, look, guys, I know a lot of people think June's the bottom, but there's a good chance we're going to be putting in new lows based on what we're seeing with these indicators. And in fact, we did. And so I think it's worthwhile to sort of systematically go through those indicators again to sort of get a gauge as to where we potentially are. Now, one thing to consider here in the short term is that Bitcoin is at the bull market support band. So, this is sort of the first line of defense for the bulls, right? To try to hold here. The counterpoint for the bears is that normally after a year where it just goes down and we get a pump above the bull market support band, we fail to hold it on the first attempt. We failed to hold it in 2019 on the first attempt, and we failed to hold it in 2015 on the first attempt. So the argument is that, well, we could fail to hold it here. That doesn't mean you won't see it bounce a little bit. I mean, it bounced a little bit in 2019 before going below it, but that is something to consider, is that normally you don't hold it on the first attempt. The market is just still too weak. Now, you might say, well, what would cause us? What would cause this worst case scenario? Because cyclically, it seems like Bitcoin's run its course, has it not? I mean, go look at some of the other indicators, right? Go look at the MBRVZ score. It looks pretty low, right, compared to prior cycles. You might say, well, it's slightly higher. Yeah, but so was the prior cycle, was slightly higher than the one before that, and that one was higher than the one before that. So MBRVZ score seems somewhat in check. The Peel multiple seems somewhat in check, though the counterpoint is normally goes down to 0.3, and we didn't quite make it there. It's like we got so close, right? We got so close. If Bitcoin had gone down just like a couple $1,000 more, the indicator would have already flashed at the same level it had before. The hash ribbon sort of gave a false signal back in the summer. And we talked about, I said I did not believe it. I thought we would go put in a new low at the end of the year. And you can see that it gave a new signal in January, but it could again be just a false signal. Normally, you'll get several of them before you get a real sustained bull market. So that is something to consider as well. One thing that I was looking at recently, I'm getting a little ahead of myself. I mean, I don't want to talk about too much in this video. We'll leave some stuff for future videos. But I think the other, there's some other things we could talk about. I'm just trying to figure out if it's worthwhile to really go how far. If you look at this chart, the total market cap, the lower regression trend line down here, you can see it's below 600 billion. We mentioned that the worst case is probably somewhere 400 to 500 billion. If you take the percent difference between the market cap and the fair value logarithmic regression trend line, you get something that looks like this. Draw a line at the bottom. You can see we normally go about 65% undervalued. Right now, we are only about 52% undervalued. So that's where we currently sit with respect to that. Perhaps we should go ahead and wrap it up here. We've covered quite a bit, And I think it's worthwhile to just sort of think about everything in this video, not to take it to the bank or anything like that, but just to consider it in your list of potential outcomes, especially given the fact that we are continuing to follow the analog from the dot-com crash with respect to crypto. And then maybe one last thing is, when comparing all this, everything's somewhat related, right? If you look at the S&P 500 bear markets and look at the context of history, and we look at this bear market compared to sort of the extremes of prior bear markets, you can see we're right at that level where we would have gotten rejected in prior bear markets. That could lead us to new lows. The average bear market for the S&P is about 9 months. We already had that, but the one that includes recessions is closer to a year and a half. And there's still plenty of evidence to think that we are in fact heading for a recession, even though it hasn't occurred yet. I haven't been of the opinion I know a lot of people said recession in 2022, and they just keep calling recession, but again, the indicators suggest one is coming, not necessarily that we're in one or that we've been in one. Okay, just because the stock market goes down does not mean we're in a recession. Okay, we go down. I mean, 2018 the stock market went down, crypto went down a lot. Crypto went down more back then than it has so far this cycle. It still wasn't a recession. You look at the yield curve, right? Treasury yield spreads. Historically, when you get these spreads, the only way out is via a recession, right? That's the way out. When you look at the Treasury yield curve, you can see the inversion of the yield curve. And when did it look similar to this? Normally, it looks like this. Go back to the recession back in the financial crisis, right? You saw the inversion. Go back to the dot-com crash. You saw the inversion. You see the inversion now. So again, the reason why the worst case scenario might play out is nothing necessarily related to crypto, but it could just be because of a recession. It could also be due to regulations. There's a lot of reasons I think that it could play out. And because of that, we need to consider it. I think we'll go ahead and wrap it up. Make sure you subscribe if you're not subscribed. Give the video a thumbs up. Again, we do have Into the Cryptoverse Premium at intothecryptoverse.com. We actually do 3 premium videos per week, on one on the weekend, one on Tuesdays, and then an AMA on Thursdays. So just to give you an idea of some of the stuff you get, and so on and so forth. So, and that's for the highest tier. But I think we'll wrap it up there, and I will see you guys next time. Bye.